All right, now it's 12 o'clock. Thank you, everybody, for coming in to Minorea-BEM Contractor on the Grow podcast series. The Contract on the Grow podcast and webinars are all designed for businesses that are going through, hurdles, right? As you grow, you have to experiment growing pains, and we try to cover those growing pains through subjects such as the one we're going to have. So welcome. I'm going to give you a little bit of an intro of what Minorea Business Equality Movement does, and then we'll go right ahead and introduce Sharon. Um, um, and Sharon can take it away from there. All right. So Minorea Business for contractors. We work in getting a contractor from contract ready to securing a contract and outperforming on their delivery, by giving them back office support and making sure that you get paid and you perform, so you can get more opportunities after performing on those particular projects. So it's of our best interest to educate contractors and our ecosystem of contractors, so you can find the opportunity and also execute it. So Kevin, nice to see you. He's
Hi,
also a partner,
Kevin.
so I'm glad to see you're in. So we have a featured guest. Her name is Sharon Senko. She's with Active Opportunity. If you can do the next slide, um, Mauricio.
Can you see the new slide?
Yeah. She's with Inclusive Action. Yeah, I was wrong. Yeah. So, business development officer with Inclusive Action. Inclusive Action community development financial institution, and we want and they work hard in helping with one of the hardest things that a contractor has to face, making sure that they are financially healthy in order for them to secure capital. So Sharon, welcome.
Thank you so much. Good afternoon, everyone. Thank you so much to Minoria for the opportunity to present today and be part of this podcast. And really, really grateful for all the work that you do to support entrepreneurs in this industry, and super grateful to collaborate with you. So I'm Sharon. I'm our Business Development Officer. Inclusive Action, we are an economic justice nonprofit, and as Andrea mentioned, we are also a community development financial institution, which means we are a small business lender who's been designated by the Department of the Treasury, in particular, to serve small businesses that have historically been left out of our traditional banking systems. I'm sure folks on the line have had experiences with maybe it's not so easy to get a loan from a bank these days. Especially now. So that's where CDFIs like us step in. So we are working to build an economy that works for all of us. And the way we do that is by providing low interest loans to small business owners that are as barrier free as we can make them, as well as we offer workshops, often in collaboration with great partners like Minorea, and other resources for small business owners. You do not have to be a loan borrower to attend any of our workshops or access our resources. So we welcome folks to get engaged with our ecosystem. We also do a lot of policy and advocacy work for small business owners. If there are policies or systems that we'd like to see changed to better protect you all. So thank you. Very excited to be here and jump into this
Amazing. Thank you for sharing
conversation.
all that, Sharon. Well, we wanted to create a dynamic of questions and answers, sort of, a podcast type format, because there's so many questions when it comes to qualifying, right? And when it comes to understanding what a small business really needs to have prepared and done before really reaching out and asking for a loan. So, what mistakes do you see, especially in the construction industry, being that it's such a competitive or such a dynamic and challenging industry to fund? What do these contractors need to avoid and need to do to prepare to in order for them to have a healthy financial outcome where you can say yes, this person is completely approved because they have all their ducks in order?
Great question. So first, with regards to us and most responsible lenders, we would want to see that any business and personal debt obligations are up to date. So if there are missed payments on any personal or debt obligations that are current, we would need to see that those accounts are brought up to date before we can move forward with a loan. So I think a lot of folks, especially I know the construction industry is so capital intensive. And so folks may sometimes come to a lender for a loan and it's already too late because they're behind on their other obligations. And so what we want to do is reach you before you get to that point. And what you want to do is prepare yourself so that you are able to access capital before you get to that point where you're already behind. So often we see folks who are coming to us, and unfortunately, because they're already behind, adding more debt is often not the best solution. Um, Second is, excuse me one second. I'm so sorry. I'm just
Go ahead.
recovering from a cold. The second thing is not tracking revenue clearly. So, ensuring that you're tracking your revenue, especially if you're going after these contracts, they're going to be looking at your financials. So we want to see that you are, whether it's in QuickBooks, some other financial tracking platform, even Excel, even for us, we take cash logs that our small business owners have provided us, but we need to be able to see and confirm your revenue. We know sometimes folks take cash jobs, deposit that cash so that we can count it when we're looking at you as a lender. As much as possible, we know this is tough, especially for emerging contractors, as much as possible to separate your personal and your business financials. That's a big one that lenders will have a difficult time with if we're seeing a lot of cross expenses coming in. For us, we don't require that you have a business bank account. So, folks come to us and their financials are very intertwined, and that's okay. But we'd like to see that you're working towards separating those because that's what's going to set you up for success in the long run.
Yeah,
Um,
Sharon, if I can
we
interrupt,
know
if
that
I can
as a,
interrupt,
yeah, yeah,
I,
please,
I
please.
I just want to mention that it's not okay. It's not okay. It's okay because you are working with these businesses, right? That just shows what the difference of a regular bank versus a financial institution that supports the community. That's the difference. But it really isn't okay when it comes to structuring your company and commingling in personal transactions and putting them on your business and vice versa. It's important that if you do start with Sharon and you have that, then we want to be able to support you in understanding how can we start changing that, right? How can we remove the personal, the start categorizing what are the personal transactions versus the business transactions, and that's where Sharon comes in as a good partner of us, where they help you along with us to get you to that level where now you can actually build yourself up to more and more financing. Go ahead. I'm sorry
Yes.
I interrupted.
No, please interrupt at any point. I want to make this as conversational as possible. And Yes, thank you for that clarification. Of course, it is not okay in terms of how you should be structuring your business. So you should start making those changes as soon as you can. We don't want it to be a barrier to accessing capital, but I will say that if your finances are very intermingled, it will impact how much capital you're able to access. So if you're already separated and it's personal and business are separated, the better chance of success you have in getting a loan. So start doing that as soon as you can. And then the last thing is we are not the IRS, and we know that businesses, especially if you're a S corp or a C corp, your CPA may be writing off a lot of expenses because you want to reduce your tax burden. And that makes sense to a certain extent. However, if your taxes are reporting losses every year, it's going to make it really hard for a lender to give you a big loan. CDFIs like us, we can be a little more flexible because if we're seeing consistent revenue coming into your bank accounts, that counts for a lot versus the taxes. But because you're reporting losses on your taxes, even if it wasn't truly like a 50K loss, we can't move forward with like a large loan until we see that you're reporting profit. So do get in the habit of reporting profit on your taxes if your goal is to be able to obtain a large loan in the future.
Awesome. You covered a lot there. So Sharon, how much is like the funding option with your institution,
So our
inclusive action?
loans range anywhere from 500 to 75,000. We know for a lot of emerging contractors that might be just enough to help you purchase a piece of equipment, get you working capital that you need to fulfill a contract. There are other CDFI partners that go up to, $1 million, 2 million that we're happy to connect folks with as well, for those of you who may need larger amounts of capital.
Yeah, that's good to know. So you help the smaller ones, the ones a lot of the banks don't really want to help. You give them opportunity. So that's what I
Exactly.
love about inclusive action, and that's what I like when working with CDFIs. They really are there to support the growth of the community in their areas, and some have different goals, right? Yeah, according to their institution. And your goal is to support and help small businesses. That's why we align so well. All right. So tell me, in building a stronger financial foundation, you already mentioned a few items, but I also want to address that it's not only to be fundable, right? It's also having a healthy financials is something that in contracts you have to share, right? They ask whenever you're getting certified or whenever you're getting pre-qualified, you have to provide your financials, and they want to see them healthy. And unfortunately, sometimes because we don't have a good setup on our QuickBooks. We don't know how to, really categorize those areas. It really affects the decision making whenever you're securing a contract. So it's besides making sure that you do have the funds necessary to secure the contract, you also to be able to get awarded. It weighs heavy on it. So what do you recommend in with companies that maybe are starting or they're starting up to that goal of securing contracts, rather just doing projects that are residential or commercial that don't require that underwriting?
Yes, thank you. And I think this is a great point around why we love partnering with you and working with organizations like yours because you're helping folks get ready to obtain these wonderful contracts. And in doing so, all the steps that you're taking to be able to obtain these contracts are very aligned with what you need to do to be able to get funding. So your financials, showing that you have the operational capabilities in place so that you have systems and processes for tracking those financials on a regular basis. Another thing that folks will look at, and I'm not, you can speak to whether this is looked at in terms of contracting, but in terms of lending, we're also looking at um, clarity for you have a really, you don't just track your financials, but you have a really good understanding. So you know your cash flow, you know what your expenses are, what revenue's coming in, and you have a good understanding of when, every business has its ups and downs. You may have a month where you're negative, you may have a month, and then you have your positive months. And so really understanding your cash flow and being able to explain that to an underwriter is really important, especially because an underwriter is not going to be an expert in your industry. We have a lot of experience working with construction companies, and I'm learning so much from you about the industry. But um, so your ability to explain to an underwriter your business model, your financials, your cash flow, your various expenses really shows to an underwriter that you have the capacity to take on this loan. And then the last thing that we look at is community. So, the community that you've built around yourself, meaning, are you engaged with a partner like Minoria? That's amazing. If you're coming out of a program like this to a lender like us, that looks really positive because it means that you've gone out there and you've sought support for yourself. Have you also connected with any other like free business organizations? That also goes a long way for us. Um, and then, of course, with that, things like credit and last would be your use of funds. So, how are you planning on using the funds? That is as a lender, we want to see that you have a clear idea of how you're planning on using it. If folks come and they just say, "Oh, I need 75,000 and it's for working capital." Well, what is that? Is it so for a lot of folks in construction, it's maybe going to be for equipment. That's very clear use, and that's great because we can see how that equipment is going to grow your capacity or your ability to take on new jobs. If it's working capital, then break it down for us. Is it to fulfill a contract? Is some of it going to payroll? We really need to see that you've thought that through.
Yeah, for sure. So tell me, what's the lowest credit score that you've helped the business with?
Oh gosh, we've given loans to folks with 400 in the 400s, honestly, especially because for us and many other CDFIs, we can support business owners no matter what their immigration status is. And so sometimes folks may only have a 400, 500 credit score because they just don't have a credit history.
Mhm.
And so we can work with that, but we're going to start you at a very small loan, maybe 2,500, so that you establish that history of payment. Um, while we don't have a minimum credit score to access our loans, we do have credit ranges. So, if you have a credit score in the 500s, we can't give you a $50,000 loan. We're going to start you with something smaller just to establish that repayment and relationship with us.
And relationship is very important. That's what we're all about as well, is making sure it's okay. If you're starting up or you're needing to redefine, your procedures, your processes, and your internal organization with your company. It, but the goal is to grow with you, right? So just like you are giving an opportunity to a company that typically won't have that type of opportunity anywhere else, it's with the concept of being able to grow with them, build a relationship with them. How big is character in your decision making, Sharon?
Yes, I love this question because we call CDFIs character-based lenders. So Typically, if you're going to go to a bank or something, they're just looking at your numbers, and that's it. Maybe running it through an AI algorithm, and no hate on the banks. We work with the banks, but the way that we're different is we're a character-based lender. So we're also going to look at who you are as the business owner. Part of our application process is, we don't like to call it an interview because that sounds intimidating, but a chat where we get to know, why you started the business, why you're passionate about the industry, where you want the business to go in the future. Because, like you said, we want to be a partner with you long term. So we hope maybe you start with us with a $25,000 loan, and then the next year you refinance and get a 50,000, or you pay it off if you got a big contract and you come back to us for a 75,000. We love having returning borrowers and seeing them grow along that journey. And so character is a very big piece. And honestly, it's where we can make exceptions. So let's say you don't have the best credit score, but we can see that you're out there like hustling, you're in the community, you're so passionate about the business, you've been super responsive to us. We can see that you're engaged in all these other programs. Like, we know how hard you're working. That is where we can say, you know what, maybe let's make an exception. Let's give him a little bit of a higher loan. And because we can see that her character is so strong and devoted to the business, and that serves as a risk mitigant for us.
Yeah. Well said, Sharon. Well said. So I think we'd be there. There's so many other questions. Like, you already broke it down on what that means in relation of what character. I was just about to ask you, what does that mean? What does character mean? I think responsiveness is one of the major challenges for a lot of contractors, especially that they're out in the field. Some started that way, so they don't have the habit of checking their emails, answering back. They're in the construction industry. More than 80% are Latinos, right? And not all of them tend to dominate English, and the communication barrier is that as well. So we're coming to a point where it's so important to be responsive and to show up, um, that we're now registering that through our programs. We have a contractor readiness pilot program that we have going on right now, and the next phase is going to be having sort of like a report card, right, of how often do you really connect in a weekly basis, and that is also a challenge that a lot of the decision makers, the commander in chiefs, engineers, project managers, estimators, all have that same problem, that some of the contractors that want business, they're not necessarily responsive. So how can they give them business, right? So that also contributes a lot to the character of a company, because if you can't move forward on something that small, of connecting over the phone or connecting on your video conference call, then how responsive are you going to be on the major projects? So that's something to think about, and I completely agree with taking a look at all of those characters of a person in order to make a decision whether that person is going to be a really good client, for you. So who can look for you guys? What do they have to be in a certain region? Are they gonna Do they have to serve, or do business in a place? Can you give us those details?
Yeah, and thank you for your note on responsiveness. I just want to add that for us, in terms of responsiveness and communication, I think for us, we have capabilities in both English and Spanish, and we also can meet with all, set up in-person appointments for folks that may not be so tech savvy, or who may want to just maybe you only have 2 hours of time because you're so busy. So come do an in-person appointment with us, and you can get the whole application done in one sitting. So We really want to meet folks where they're at, but yeah, responsiveness is super important, or at least communicating with us. Hey, I'm going to be on a job the next week. It's going to be really hard to reach me. So then we know. In
Right.
terms of business owners that um, we serve business owners across LA County, or if you're doing work in LA County. So if you've got contracts in LA County, we can work with you. But ideally, either the business or the business owner resides in LA County. But if you've got a contract, we can work with you as well. And we work with businesses that have been generating revenue for at least 6 months. So that's still technically startup, but we don't work with like pre-revenue startups.
But that's such a you guys make it so accessible. Romel says, "Did I hear the loans are given with a score of 400, 500? It's like it's sort of incredible. I think that's I don't know if that's a remark or a question, but yes, she did say 400s, 500s, Romel. So
Wow,
um,
that's I've never heard that, but okay.
right, yeah, I know. So now that I addressed your question, we're going to open it up for anyone in the audience that wants to ask anything to Sharon. Any questions related to what loans and access to capital, structuring your finances the way you should? You can also, if in case you guys don't want to unmute yourself, you can also put the question in your chat box or in your chat. So, okay, well, I have, oh, you responded, Sharon. Okay, so Sharon responded back.
Yes, I just
So,
wanted to caveat that like we'll likely start you at a much smaller loan. If your credit is in like the 400s or 500s, we'll start maybe with a $2,500 loan again to reestablish that history of repayment for us, and then you can continue to grow your loan size from there.
okay. How do they connect with you, Sharon? Of course, we're going to be doing this presentation and we're going to share it with all the registrants. Um, However, if you want to share something publicly right now, you're open to it. If not, you can always connect with Minoria Business Equality Movements, and I'll connect you guys to Sharon.
And I'll drop my contact information in the chat. I think a common misconception is that lenders aren't friendly. We're very approachable, we're very friendly. You can reach out to us anytime. We're happy to have a conversation with you, even if you don't know that you want to pursue funding yet, but you have questions. We're always happy to jump on a call, and it's good to start building a relationship with a lender. And that's why it's so wonderful that you're doing this session. It's good to start building a relationship with lenders before you need capital. So you want to be in a position where you already have built these relationships. People know you, so you do need capital. Uh, you already know folks. So please reach out to us. And another common misconception I'll just add is that take out a loan, you need it. Ideally, you're getting it before you need it. So you're not in a pinch. So ideally, you're not taking out a loan when you're like, shoot, I need more money, and it's kind of too late. So ideally, that's part of building a relationship with the lender, is so that you can identify. And what's so wonderful about programs like this is you can, it'd be good to get a loan to invest in my business right now. I don't really need it, but it's going to help me grow my business. And so that's the prime time, because if it's already your hint, it's going to be for you to access.
Most likely. Derek, you have a question?
Yes, I do. Can you hear me?
Yes, I can hear you.
Okay. Yes. I was wondering, what is the best loan to apply for that if you're looking for capital, this is your first time, and it would be the easiest way to be approved. So does that make sense? I'm just looking for something that you can, like a starter that's the easiest to be approved, just capital, just to see how much you can be approved for.
So I would say working with CDFIs is a really good first step. I would avoid as much as possible merchant cash advance loans, or sometimes factored loans fall into this. um, pipeline. So it's the folks, I'm sure as small business owners, you're getting those texts that are like, need $75,000 today. Like, you can get it into your bank account by tomorrow. And those fast offers, and understandably, sometimes business owners have to take those in a pinch. But we've seen people come to us with rates of like 400%. Then it's hard to get out of that once you're in it. So CDFIs, Derek, would be a really good place to start. Depending on what your need is, you could access a term loan, which is just your standard term loan where you're making a fixed monthly payment each month. Some CDFIs also offer lines of credit. So that could be an option, again, if maybe you're needing it for payroll or to fulfill a contract that you have net terms on. But definitely, I would suggest working with CDFIs. We're going to be the most flexible, and we're also going to be responsible lenders in terms of we're not going to give you debt if it's going to be detrimental to you at the end of the day.
And like with the fixed term versus the line of credit, is there one that's, like I'm saying, easier to apply for versus the other, or does it matter?
I would say more, it's typically easier to get a term loan than a line of credit. Lines of credit, though, more CDFIs are starting to release lines of credit products. So I think when you're shopping around and talking to different CDFIs, that's exactly the type of question that you can ask their representative. Like, would you suggest I go for a line of credit or a term loan? Which one is an easier pathway for a small business owner like me? And they'll be pretty upfront. Typically, my experience has been that term loans are easier, just because with a line of credit, because it is something that you repay and then you can continue to draw down on it. It's an open line. They're going to be looking for more documentation, et cetera, to ensure that your business revenue is really steady for a very long time.
Okay. And does Minora have a list of the CDFIs that they recommend, or do you just have to look one up yourself, or how?
Well, we can certainly provide. Yeah, Derek, we can certainly provide a, a list of CDFIs, because that's actually where we were able to meet, me and Sharon, right, in a conference related to CDFIs. Um, but the goal with Minoria, Sharon is a direct partner when it comes to anything related to finances and giving opportunity to small businesses and working together. The goal for Minorea-BEM is that you secure a contract and you're capable of executing the contract, right? So with us, it's a little more than just providing a list. We can certainly provide you a list, and then you can start building your relationships and seeing how you can grow with that. But like Sharon explained, it's so important to understand where you're going to direct your money to. And I think, Sharon, you also addressed a very common problem, which is cash advance, merchant account, cash advance loans. Those particular loans are something that you can get approved that same day if you wanted to, and get the funds. But the interest is incredible, and it's not really to help a small business, rather to just capitalize and get money from you. I'm not saying they're bad, but I am saying that they are not good for small businesses, because they tend to keep you on a hole. It's hard to get out of that hole, like Sharon mentioned. So, Derek, if you wanna share your, I think you already have, you already shared your email address and a phone, and we can certainly connect and give you a little more information of what we can do for your company. Okay?
Okay, that sounds good. Thank you.
Do you Sharon, can you explain what a cash advance loan means? And then I know you've taken and helped companies get out of that hole, right?
Yes, we are able to refinance only up to 15,000, but we do have CDFI partners who are able to refinance more. That is the most ideal, is that we're refinancing those merchant cash advance. So merchant cash advance is different from like a term loan, because typically what they do is, so they don't call themselves loans. That's how they get around the um industry standards, and how they step outside of regulations. Because as a loan, the maximum interest rate, I believe, that's legal currently is maybe 40%, um, which is still quite high. But merchant cash advances, what they call themselves an advance because essentially they're advancing you funds, and then they are taking from your future revenue. So sometimes it's a daily payment. And what they'll tell you is that it's going to be, and some of them will be percentage based on your revenue that day or that month. But what happens more commonly is that they just take out a fixed payment from you every day, or every week. It's not going to be a monthly payment with a merchant cash advance loan. It's going to be a week, but usually a weekly. And they're oftentimes going to say that they're going to only take a percentage of how much you made that week, maybe 15, 20%. Even 15, 20%, that significantly impacts your cash flow. But what we commonly see is that they just end up taking a fixed amount, no matter how much. Maybe you made zero that day. It doesn't matter. They're going to take 500 out of your bank account. The next day, maybe you also made zero. Doesn't matter. They're still going to take 500 out of your bank account that day. So we see people who come to us who have, daily payments of $500. And because of the interest rate, they might have taken out a loan for 60,000. They've made 20,000 in payments, and their balance is still 55,000. So
Yep.
all going to interest. So be very cautious. People use them in a pinch if you can pay it off really quickly, but otherwise, as you said, it can really dig you into a hole.
Yeah. Thank you for sharing that, Sharon, because it's happened and it's hard. But contractors need to be very patient when they're already in that hole. And it's all about planning and working together to get you out of that. And working with CDFI institutions are probably the best route, because a lot of contractors that do go into that hole, they just did it because they're committed and they want to complete the project. But sometimes if we think that we're going to bid it the right way with a good profitability, and it's not. You're just not accounting for your salary. You're not accounting for overhead, and that's what causes these contractors to go to go out of business, to start all over. And then the construction industry, when we're one of the industries where there's more suicide rates. And then this is, imagine we're talking about a $50,000 loan. Imagine if it's a cash advance of 300,000 or 400,000. Like, you really have to have a plan in order for you to make sure that you pay it off fast and still gain a profit. So there's a lot to learn about bouncing back when it comes to that financial hardship that you're going through. And I know Sharon's such a good advocate for small businesses. She's ready and up. So tell me about any of the workshops. Do you have any consistent workshops that maybe the audience can take advantage of, or should we talk about the workshop that we're working on?
I was gonna say, I feel like we can shout out. I'll drop the link to our workshops calendar for folks. So we do workshops both in person and virtually. And they're done every month on a variety of topics: pricing, marketing, business financials, a lot of different topics that can be suited to your needs. But what I'm most excited to talk about is a collaborative workshop that we're going to be doing. I believe on July 9th is our ideal date.
Yes, yes, yes. So make sure that everybody registers for that workshop if you're not certified with the Department of General Services. Um, we are doing a workshop where we want to prep you and having all of your documentation ready before the workshop, because our goal on that workshop is for you to come out with a submitted certification for the Department of General Services. And what does that mean? Well, you'll be able to be in one of the small business certification lists um, statewide that show your company is eligible for working with the state. And what does the state spend money on? Projects. They spend money on all kinds of products. So it's going to be a great workshop that we're going to be working together. It's going to be in your location. Sharon, where are you guys located?
We are located in Boyle Heights.
So that's where we're going to be on July 9th at 10 a.m. We're going to also share some of the workshop activities that Inclusive Action has in our calendar. We send a newsletter every month to talk about all the activity that we'll have for that particular upcoming month. So we're getting ready to share the activity that we're going to have in the month of June. So make sure to stay tuned. And I believe that's it. Anyone has last shout out for questions before we wrap it up? Okay.
I don't have a question. This is
All right.
Teresa Martinez, but I just have a comment. I just wanted to thank you for this workshop because it's so eye-opening. I didn't know there were many CDFIs out there that help business owners. I'm part of a CDFI, and we only help homeowners. So this is great information, and I know that it's valuable information. As Andrea mentioned, what happens to some of these business, they get caught with these banks and they have these 30-year loans, and it's just, driving them nuts. So I appreciate that. And we need to really get the word out to the community to let them know, to take this route and work with CDFIs. That's more favorable, for their business and for them in the long run. But I don't think we're doing a well enough job as a business owner myself, because I really didn't know that. And then refinancing the loan through a CDFI, that's pretty incredible as well. So that's really good information.
Mm-hmm.
So thank you for this. I learned a lot, and I'll be able to share that. Thank you.
Thank you, Teresa. Yes, please share it. There's a lot of businesses that I tell them what CDFI is. It's like, what is that? No, like a lot of people don't know what a CDFI is. So it is important to spread the word. We're not saying also banks are do focus on. There's a lot of banks that focus on small businesses. However, the underwriting needs to be there, right? All the ducks in a row need to be there, and sometimes as a contractor we're not there. So reaching out to organizations that can support you on that, and CDFIs, there's all kinds of them. There's a real estate that focused CDFI that the organization Sharon's small businesses. There's also funding for the community. There's CDFIs that help fund nonprofits. So there's a lot of them, and it's just a matter of getting educated. And thank you for participating and getting in to get educated on the construction industry. So thank you, Sharon, for your time and for being a partner and educating us. And thank you, everybody, for
Thank you so much
participating.
for having me. Thank you for your partnership. Thanks to everyone for your time. It was really wonderful being here.
All right. And that was, I love this type of chat. If the audience would see all the questions I was supposed to ask, and I asked all kinds of other questions.
Yeah. You're great moderator. Make it so easy.
Sorry for that, but A very organic moderator.
I love it. I love it.
All right.
Thank
Well,
you
you
so
guys take
much.
care.
Have a great one, everyone. Thank you so
All
much.
right. Thank
Bye.
you. Take care. Bye.
Bye.